Ladies and gentlemen, good day and welcome to ADF Foods Limited Q2 FY'25 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravi Uddeshi from EY. Thank you, and over to you, sir.
Thank you, Neha, and good afternoon, everyone. We welcome you to the Q2 and H1 FY'25 earnings conference call of ADF Foods Limited. To take us through the results and to answer your questions, we have with us the top management of ADF Foods Limited, represented by Mr. Sumer Thakkar, the promoter, and also the General Manager, Sales and Strategy, and Mr. Shardul Doshi, the Chief Financial Officer. We will start the call with an overview of the business and the current business update by Mr. Sumer Thakkar, and then Mr. Shardul Doshi will give his comments on the financials. As usual, the standard safe harbor clause applies while we start the call. With that said, I now hand over the call to Sumer. Over to you, Sumer.
Thanks, Ravi. Good afternoon, everyone. Coming to the quarter gone by, our consolidated revenues increased by 29.5% to INR 161.4 crores on a year-on-year basis. This was driven by demand across all our brands, with our flagship brand, Ashoka, achieving deeper market penetration. The US expansion of our Truly Indian brand has seen good acceptance in its initial stages. It's seen good success in terms of listings in highly prestigious accounts like Whole Foods, Stop and Shop, and Raley's, as well as some key online platforms like Amazon. We expect this customer engagement to gain greater momentum in the forthcoming quarters. Our India-focused ADF Soul brand expansion is progressing according to the plan. We've made inroads in quick commerce and e-commerce, and we're preparing for a strategic push into modern trade channels, which should happen in the second half of FY'25. Our core business continues to achieve double-digit growth, and we plan to invest further in both the ADF Soul and Truly Indian brands. We anticipate these investments will generate returns in the future. Overall, we're enthusiastic about our business's growth potential and remain committed to achieving sustainable and robust progress in the coming years. Overall, we remain committed to our earlier guidance of doubling revenue by FY'27 and high teens margins for the long term. In line with our expansion plans, we're strengthening our management team. The Surat Greenfield Phase 1 expansion, aiming at supporting both new and existing frozen food lines, is progressing as planned. We're optimistic about the business's future potential and remain committed to achieving strong and sustainable financial growth. I now hand over to Shardul, who will comment on the financials.
Thank you, Sumer. Good afternoon, everyone. I'll first share the standalone performance. In Q2 FY'25, we saw revenues from operations at INR 125.6 crores. This marked a 29.1% Y-on-Y growth and 29.5% Q-on-Q growth. Our EBITDA for this quarter was INR 27.7 crores, again Y-on-Y increase of 22.3% and Q-on-Q increase of 21.8%, while our EBITDA margin was at 22%. Though our EBITDA margins are healthy, we saw a slight decline in our margin due to increased investment in our brand building activities for ADF Soul and Truly Indian brands, hiring at senior level management, and higher freight costs, which we have seen in the Q2. However, we were still able to partly mitigate the same through cost control and process efficiencies. PAT for the quarter was INR 21.4 crores, a 20.6% increase Y-on-Y and 24.8% increase Q-on-Q. Our PAT margin for the quarter stood at 17%. Coming to the H1 FY'25 performance, our revenues from operations was INR 222.7 crores, up 22.4% YoY. EBITDA was INR 50.5 crores, registering an increase of 15.3% YoY. EBITDA margin was 22.7%, a decrease of 140 basis points on YoY basis. PAT was INR 38.5 crores, up 13% YoY with a PAT margin of 17.3%. Moving on to the consolidated performance, our revenues from operations for Q2 FY'25 was INR 161.4 crores, an increase of 29.5% YoY and 32.7% increase from the last quarter. Our EBITDA for Q2 FY'25 was INR 27.7 crores, recording an increase of 27.2% YoY and increase of 41.2% from the previous quarter. Our EBITDA margin stood at 17.2%, a slight decrease of 30 basis points on a yearly basis. As explained earlier, our investment in brand building and a strong management team will drive continued growth for our flagship brand Ashoka and expand the market presence of Soul and Truly Indian in the short to medium term. Our PAT for the quarter was INR 19.7 crores, marking a YoY increase of 31.8% and a Q-on-Q increase of 36.7%. For Q2 FY'25, PAT margin stood at 12.2%. For half year ended September 30th, 2024, consolidated revenues from operations was 283 crores, up 19.4% YoY, and EBITDA was INR 47.3 crores, a growth of 8.2% YoY. The EBITDA margin stood at 16.7%, a decrease of 170 basis points YoY. PAT was INR 34.1 crores, up 14.8% YoY, with a PAT margin of 12%. Our distribution business has done well too in this quarter due to better supply chain from our principals and good demand from the market. This has helped us to do a sales of 31.2 crores in distribution business. All our capex plans are on schedule. Our capex spend for H1 FY'25 was INR 15 crores. Cold storage at Nadiad will become operational in the current quarter. We have commenced work on Greenfield 2 and we have finished with the land leveling and have received necessary local approvals to commence construction there. We have placed orders for civil work and construction staff has been mobilized. We are in the process of placing orders for the major equipments now. We expect our Greenfield project to be commissioned by September 25. Our balance sheet continues to remain debt-free as on date, and we are sitting on a cash balance of rupees 138 crores. Considering company's performance, board has declared interim dividend of 30%. Overall, we continue to judiciously invest in our manufacturing capabilities as well as our brand building exercise in order to focus on increasing our margin profile as well as deliver greater returns in the long term. With this, I now request Ravi to open the floor for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kuber Chauhan from Anand Rathi Group. Please go ahead.
Yeah, hi. Thank you for taking my question and congratulations on good set of numbers. There are two questions from my side. First of all, I want to know about the penetration of the Truly brand and Ashoka in overseas market. Have we tapped into new markets or have we increased the distribution network? And secondly, how the global demand is looking right now, given the Red Sea crisis have been there, and I have also heard that there are some freight cost increase, container availability has been an issue. So on that terms, how the things are looking on?
Yeah, Kuber, hi. So, sorry, correct me if I'm wrong, but your question in terms of demand was for Truly Indian and Ashoka, correct?
Yeah. All the three brands, if I may.
So, Truly Indian, we've just got some fresh new listings with supermarket chains in the US, like Whole Foods. Whole Foods is a pan-US listing, so we're in about 530 odd stores. And then we've also got some regional names, but that are still very strong brands like Stop and Shop and Rayleigh's. This, if you put them together, will be another 650 odd stores. So overall in the US, we're listed in about 1,300 stores with Truly Indian, which is all fresh listings that happened this financial year. With Ashoka, although we're still selling to our existing markets, what we've been able to do successfully is get more depth within our current stores. So we've started selling more products to the same stores, which is what we've done over the last 3 years consistently, which is why if you look at Ashoka's numbers, you can see about a 30% CAGR. And for Soul, currently the business mostly comes off quick commerce and e-commerce, but we are in the process of opening new accounts both in modern trade as well as within e-commerce and quick commerce. So those numbers should start reflecting in December as well. And in terms of demand, sorry, to answer your second question, in terms of demand continues to remain robust. There are some challenges with shipping, but it's getting streamlined. It got streamlined this quarter. A lot of the issues that we had last quarter got resolved in the very first month of this quarter. And freight rates are also softening. I mean, it's nowhere close to where it was before the Red Sea crisis, but it is on the downward trend.
So just to give you a number on the freight cost went up by almost 2.5% for us of the top line in this quarter. However, in the month of October itself, some of the sectors where we operate, costs have come down by almost 25 to 45% from the level which we have seen in the month of September. So hopefully, that hit should not be there, or it should not continue in Q3, and we should get maybe a couple of percent benefit on top left from the freight reduction.
Okay. Can you repeat the number? 2.5% of top line, right?
2.5%, correct, yeah.
Okay. And you mentioned about the 1,300 stores for Truly Indian. So can you name some stores, and also was it the fresh 1,300 was the overall count, or if it is an overall count, then what is the fresh stores from that?
So we just launched Truly Indian in the US. Truly Indian only sold in Germany before this. The US is a new market. So the 1,300 stores has been over since March to now, or maybe since Jan to now. And the names are mainly these three retailers. There's Whole Foods, Stop and Shop, and Rayleigh's. It's all listed on the investor presentation if you need the spellings and the logos as well.
Yeah. And how much percentage are they selling in domestic markets? If you can just.
Their current
domestic anywhere between 12 to 15 crores.
Okay. So, if I may ask, are you witnessing any kind of shift from modern trade to quick commerce?
So currently we don't sell on modern trade. It's just e-commerce and quick commerce, but we are seeing quick commerce really grow as a channel, which is why we want to be actively involved in that growth journey, which is why we're trying to list our brand across all the various platforms. And with our sort of product range, we do feel like quick commerce will contribute a substantial part of Soul's numbers in India.
Okay. And post this commission of Greenfield plant, how much we are expecting from that?
So generally we follow 3x of our investment rules, so we should be in a position to generate 250 odd crores of top line from that.
Okay, at peak utilization, right?
Yes. So peak utilization, it will go up to say from 280 to 90 also.
Okay. Okay, sir. That's it from my side, and wishing you a happy Diwali.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Shalini Gupta from East India Securities Limited. Please go ahead.
Yes, sir. Thanks for the opportunity. Now, I had a couple of bookkeeping questions actually. So what was the capacity utilization during the quarter?
So some of the capacities are, almost full, but I think on an average we'll be at around 70 to 75%, while some products we will be touching 90 odd percent.
Okay, and just one second. If you could just say how much was the expense on brand promotion in the quarter?
So brand promotion, it's almost 7% of our top line.
Okay, which is how different from how different QOQ?
QOQ will be similar because in this year we have spent around 7% plus on brand promotion. But from Y-on-Y number, this number used to be around 6% earlier, so it's increased by maybe 1.2, 1.3%.
Okay. And sir, if you could just talk about the sole...
I request you to come back for a follow-up question.
Okay.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. Thank you. The next question is from the line of Bhumin Shah from Samiksha Capital. Please go ahead.
Hi, sir. Congratulations on good numbers. So I have 2 questions. First is on distribution business. The margins have increased by 2-fold on year-on-year basis. So is it sustainable, or what will be the steady state margin? And on the second, the employee expense on a quarter-on-quarter has increased by 3 to 4 crore. So do we have, is it because of some senior personnel hiring, or will it remain at the same level going forward also? Yeah, thanks.
Yeah, so distribution margin has increased. One, of course, because the top line is better, as well as there are certain promotional incentives which we received from the principals. But on a sustainable basis, we have been saying that it should be around 10%, but in this year it should be around 12-13%, based on some of the incremental incentives which we received. And what was your other question? Sorry. And employee cost, I think as we mentioned in our commentary also, there are certain senior level hirings which we have done considering our future growth as well as the expansion which is happening. So there are increase in manpower, and especially at the senior level in all the sites, on the production side as well as marketing side, and hence the cost has slightly gone up.
Okay, and if I may ask, can ask one more question. So, Surat plant is expected to go live by quarter 3 or quarter 4?
As I said, September 25. So I'll say in a Q3 next financial year, we'll start getting numbers from there.
Okay, thank you. Happy Diwali to you.
Thank you. The next question is from the line of Neel Mehta from ICICI Securities Limited. Please go ahead.
Hi, sir. Am I audible? Hello.
Yes.
Yes.
Yeah. Hi. Very hearty congratulations and a very happy Diwali, sir. My main question was that you're estimating the Surat plant to go in by September 2025, and another greenfield expansion, by FY'26, where do we see the top line coming from? FY'24 was 500, and 250 crores you're saying is additionally from the new plant. So by FY'26, what do we estimate? FY'26, FY'27 at a peak utilization capacity?
So, in fact, our guidance is that we will double our top line every 3 years. So,
correct.
Our plan is definitely to achieve 1,000 crores by FY'27. So that's what we are trying to work towards.
That's intact.
Yeah, that remains intact. And there is only one greenfield. So right now, of course, there are multiple stages in greenfield which will happen later on because we are just going ahead with a phase 1 at Surat. But right now, we are just doing one greenfield. All other capex which we are doing, they are either in our existing plant in nature of brownfield or the capacity expansion which we have to do.
Right. And one more question. We've usually seen in the past that H2 has done obviously very well for us compared to H1. With such stellar results that you have given in Q2, what is our guidance for this year now? Considering, is there an upgrade on the guidance?
So we are maintaining our guidance. Of course, this quarter has been good, and we are working on in H2 also to ensure better numbers. But yes, we are definitely setting our standards high now.
Okay. Thank you so much, sir. I'm wishing you a very happy Diwali.
Thank you. The next question is from the line of Naitik Mohta from NV Alpha Funds. Please go ahead.
Hi, sir. In terms of capacity, where are we today, and how much are we adding in terms of, say, Surat plant, the greenfield plant? Hello?
Can you just repeat your question? Sorry.
So my question was in terms of capacity. What is the current capacity that we have, and what is the addition that we are doing from the Surat greenfield?
So our current capacity is around 28,000 metric tons, and Surat should give us in the first phase around 6,000 to 8,000 metric tons.
And the same capacity in the last 2-3 years, we haven't added anything, right? Or we have added? The 28,000 I'm talking about.
Right.
Right. And also, can you give me the run rate of our various brands, for this year?
When you say run rate in the sense?
Annual run rate for the brands like Truly Indian and Soul.
So, Truly Indian, it's just, I think, we have been selling Truly Indian brand in the German market, and in this current year, we have launched it in the US market. It's just the beginning, but we are expecting the US business to give us a top line of around $1 million in the current financial year, and hopefully then that number will multiply in the next year. While Soul, as Sumer mentioned, our current run rate is around 12 odd crores, and which will go up in a later part of in the next financial year again.
Right. Sure, that's it from my side. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Yes, Vimal Bhai, thank you very much for nice result and happy Diwali to all of you. Sir, we have 28,000 metric ton manufacturing facility. At which percentage we are working? Can you tell in the percentage term?
As I mentioned, I think our overall capacity utilization right now of the total capacity will be at around 70 to 75%. So we have still capacity which we can utilize for further, top line which we have to achieve. And to achieve that, whatever needs to be done in terms of debottlenecking, we have been spending that money on our plan, because some of these lines, I think when the capacity expansions are happening, we have to ensure that the debottlenecking is also happening.
And sir, out of 8.51 crore income, other income, how much from incentive from government as a PLI this half yearly?
No. Other income doesn't have a government incentive. Other income is mainly your treasury income, and your other income like miscellaneous and scraps, those kind of stuff.
So any other income as a PLI we are expecting this year?
We have. So that's part of our, in fact, operating income itself. We have, as far as PLI is concerned, in first half, we have booked around 6 odd crores of PLI income.
6 crore?
Yes.
Same. For this same amount is repeating in second half?
Yes, it should be. In slightly higher, in fact.
Okay. Sir, other expenses rises by 27%, while top line rise by 19% in first half. Any specific reason, sir?
As we mentioned, freight cost is the main, I think main reason why our costs have gone up. So, yeah.
Okay. ठीक.
Thank you. Ladies and gentlemen, please limit your questions to 2 per participant. The next question is from the line of Amit Agecha from HG Hawa & Company. Please go ahead.
Good afternoon, sir. Am I audible?
Yes.
Happy Diwali to the ADF food team, sir. My question was with respect to, are there any specific markets or segments that the company is targeting for acquisition, and are there any new products which are being expected to launch in coming quarters?
So new product development is something that's constantly being undertaken by our team. We are looking at certain categories in the second half of the year, and we are also looking to adding a few items on the Truly Indian. And on the acquisition front, we're always actively looking at good opportunities if something happens to come our way, but currently at the moment, no, there's nothing.
Okay. Thank you, sir, and Happy Diwali and all the best for the future. Thank you.
Thank you. Happy Diwali.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Ashish Agarwal, an individual investor. Please go ahead.
Thanks for taking my question. So first of all, a happy Diwali to the entire ADF team. So I just had 2 questions. One is, any new products that we have launched in Soul category, Soul brand in India in this quarter?
Not in this quarter, but you'll actually see a pretty vast new range coming in the next 2-3 months. This is across shelf-stable dips as well as certain frozen items.
Okay, so no new category that we have launched currently, right?
No, but hopefully by Jan you'll see them in stores and across certain quick commerce and e-commerce platforms.
Okay. And in the Aeroplane brand that we have got, I see that this quarter, the last quarter we have launched frozen Indian breads and Indian snacks. So this is typically targeting to your expatriate audience in Middle East who are quality conscious. So how does this overlap with our other brand, which is Ashoka, which is also present in the Middle East?
So the Aeroplane frozen is actually just for the Bahrain market. It's the Aeroplane brand has been there for a long period of time, and it has very strong brand equity. And one of our partners there requested if we could do Aeroplane instead of Ashoka. So there's no overlap. Ashoka frozen at least is not sold in that market, and all our key product items are now in Aeroplane in Bahrain. This is just one market. This is not something we've launched across the Middle East. Across the Middle East, Ashoka remains
the largest brand. Okay. And which geography does this Aeroplane, when you say Middle East, only some couple countries, or where does it cater to?
Just the one country, just Bahrain.
Bahrain. Okay. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you all for taking time out on Diwali to join the call, and wish you all a very happy Diwali, and hope to see you next quarter. Thank you.
Thank you. On behalf of ADF Foods Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line. Thank you.